The markets are crashing down round our ears. What are we going to do? Everybody's panicking. The answer is don't buy the dip and don't sell unless you are desperate. If you're under 45, this could be the first time you've experienced this kind of volatility, other than that little flash crash we had back in March 2020 at the start of banana syndrome. Well, you got to kind of get used to this, because if you're a long-term investor, these things happen. So what I'm going to talk to you about in this video is how and when these things happen and what you need to do about it today. But you've got to be very careful who you listen to, because there's an awful lot of contradictory advice out there in sunny internet land. There's a guy in America with a huge portfolio who's been telling people to buy the dip. His name is, well, his channel's called Meet Kevin. And he's telling, buy the dip, buy the dip, buy the dip. And then he's just gone and sold his entire $20 million portfolio. So I'll talk a bit more about him later. But what's actually causing this mass hysteria and panic? Well, I guess we're all a bit fragile and febrile after the events of the last couple of years. And this now coming on top of everything else, the markets are starting to tank and people are frightened and fretting and wondering what to do. So the S&P 500 in America, that's kind of in correction territory with a 10% fall. But if you look at something like the Russell 2000 index, which is all about smaller companies, that's now in bear market territory, because that's gone down by 20%. For those of us who have started investing in cryptos recently, these things seem fairly tame. These kind of movements happen every day. But the Nasdaq is also heading into bear market territory, looking like it could be down. Quite a few of the Nasdaq companies are actually down 40 or 50%. But because of this imbalance in the Nasdaq, with a handful of companies being so valuable, if they don't go down quite as much, then the averages are hiding this. So across the Nasdaq, there's a lot of companies that are 50% down, but overall it's just about heading into this 20% correction territory. And as somebody who lost a shed load of money the last time the Nasdaq crashed 20 years ago, I've kind of been there before and done that. So let's just reflect on a few facts. I mean, Bitcoin is down 50% from where it was as recently as, I think, October or November. So again, that's the crypto world, which is slightly different. But if you look at the facts and the history, and we've got a lot more history in stock markets than we have in cryptos, I think we can all just calm down a little bit, because stock market corrections like this tend to happen on average about every 15 or 16 months. They typically revolve around corrections of about 15%, and they take around about 70 days, so just over a couple of months. So if this is a typical kind of correction, we could be out of it by February, March time, and 15% across your investing lifespan. It's just going to be a little blip on a chart. So let's not get too panicky about it. Bear markets are much more rare. They only happen about every decade or so, certainly 7 to 10 years. You can't be really too prescriptive on it, but let's assume roughly once a decade. They have a bigger drop, that's about 33%, and they take just around about a year, 365 days, to go right the way down to the bottom and then start rising again. Now, if you're talking about significant drops, the Wall Street crash type of stuff, anything from 40 to 80%, that's only happened 3 or 4 times in the last century and a half, So the chances are there might be one of those in your investment lifetime, but only one. So, these things don't happen very often. And on the whole, although there are periods where stock markets don't do all that much, and obviously Japan would be a great example of that, on the whole, the major markets tend to go in a steady upward direction, apart from these periodic corrections and sometimes the bear markets, and very occasionally the crash. So before I talk about how you should respond to this, please, as ever, hit the like button, share this with your friends and family, share it on your social media platforms. Let's get as many people as possible to see this information so they know how to deal with this situation as we get into the start of 2022. And it's a little bit of a rocky start. So these are the things that kind of upset people. So do hit that like button. Now, of course, the doom mongers are wringing their hands. The professional perma bears who every single year come up with something like, this is the market top, there's going to be a crash next week. I've been reading this for at least 10 years. And to be honest, looking at things that have been going on, I've thought there must come a point where we'd see a crash. It's really, the markets have been defying gravity mainly through things like central bank manipulation. But the reality is, if you'd stayed in the market for the last 10 years, you've probably made about 400%. You've made 4 times your money by ignoring all the pundits who are saying, sell, 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 it's a panic, it's a crash, don't stay in these terrible markets. Well, it's the old mantra that the markets can stay irrational longer than you can stay solvent, but it's also the thing that makes buying the dip so catastrophic in terms of the long-term averages. You see, the worst thing you want to try and do is catch a falling knife. Nobody knows how low the market will go. Is this a correction? Is it a bear market? Is it a full-on Wall Street crash? I don't know. You don't know. And you know what? All those other gurus on the internet don't know either. So you just can't make your decisions based on that because no one can predict these markets. Investor crime number 1 is thinking you are smart enough to time the markets. There's so much data to support the fact that that is a losing strategy. So, what makes you think you're so clever? What makes you think you're so different? What inside information do you have about when this market will fall and bottom and when it's going to start going up again? Because I certainly don't know, and I don't know anyone that knows with any degree of certainty. All you can look at through charts is some kind of history about really human behavior, fear and greed, and how they respond to these kind of situations. But there's nothing more illuminating than watching somebody try to explain why the chart pattern they said was going to happen actually didn't happen. And there's always a fantastically logical rationale for that, but it's all BS because they just didn't know. So the best strategy is the simplest one. Keep on keeping on. Keep on investing regularly, dollar cost averaging, month after month. When the prices go down, you get more for your money. When the prices go up, you get less for your money. But what you're doing is A, you are smoothing out the prices at which you buy, but B, far more important than that, you're taking the emotion out of it. You are just making it a routine thing like paying the mortgage, paying the gas bill, paying my investment bill every single month. And if you're familiar with my wealth pyramid structure, you'll know there are different assets you can hold at different layers in your wealth pyramid, each doing a different job for you. And when you see bargains like this, that's the time to keep on allocating the money so that you're getting more and accumulating more when the January sales are on. And that's what we've got here. Imagine if I said to you, you can buy a Tesla. Here we are in late January 2022. You can buy a Tesla for 50% of what it would have cost you 6 months ago. You'd be off to that showroom in a New York minute. But because it's Bitcoin that's half the price it was 6 months ago, it's, oh my goodness, oh, the world's collapsing. Oh no, I was wrong. Oh, it really is a scam. It really is just a complete fake. Oh no. Yeah, right. It's down 50%. It's a great time to keep on buying, but don't put a massive lump sum in today because it may go down another 20 or 30% tomorrow. Just keep drip feeding the money in line with your asset allocation. And remember, you've got to spread across the different assets if you want to be properly diversified. So, you might be shocked if you're a new crypto investor. This might be the first time you've seen a crash. Well, welcome to my world. I've already seen a few in the time I've been involved. Those who've been involved from the start have seen multiple crashes, from when it was a few dollars up to the tens of thousands, back again, up again, back again. This is normal. It's as predictable as parties in Downing Street during lockdown. These things happen. We just have to live with them. It's part of the investing journey. And, if you're going to make the returns, you've got to have the investor mindset. And the investor mindset is A, don't try and time the market. B, don't panic when there are corrections or even bear markets. And C, be diversified. Investment crime number 2 is not being diversified. And that's where my friend Meet Kevin comes in. This is this guy with the American channel. He's got gazillions of followers. He kept saying, buy the dip, buy the dip, buy the dip. And then suddenly he says, oh, by the way, I've just sold my entire $20 million portfolio. So I didn't buy the dip myself. I just told you to do that while I sold everything. That's kind of confused all his hundreds of thousands of followers. But what he had done was commit cardinal investing sin number 2. He had a portfolio that was really, really concentrated in this handful of tech stocks, the Teslas, the Amazons, the Facebooks, whatever. And it went down from $32 million to $20 million in 90 days. And he panicked and he sold a lot. Now, maybe he'll get back in at a lower price and make money by timing the market. Okay, maybe he'll see sense and come back with a more diversified portfolio. Who knows? But what you do not want to do is be in a situation where you're panicked, because if you're feeling like that, the chances are you are either over-invested, you've got too big a position in something, you're over leveraged, you're perhaps, if you're trading on leverage, you're obviously going to exacerbate your gains, but you also exaggerate your losses, so that can be very scary. Or if you're over concentrated, if you've got too much of your portfolio in one asset class or even one company's shares, then you are going to be vulnerable. You're going to be exposed at a time like this. And this is when diversification really does become the only free lunch in investing, as somebody very smart once said, and I can't remember who it was. So for him, for Kevin, maybe selling was the right thing to do. For most of us, it most certainly isn't, because what you'll find is when the markets recover, the recovery can happen almost as quickly as the fall. And if you miss some of the best days in the market, then your overall performance over a period of time can really, really suffer. So trying to time the market is absolutely pointless. So call me old-fashioned, call me a boring old fart. I've been called a lot worse than that. But my big hot tip for what to do in these troubled times is to just keep on keeping on. Keep on doing what I've been saying you should do for years and years. Drip feed the money into a series of different assets to give you diversification, not just between shares, but between shares and gold, between gold and silver, between precious metals and cryptos, between financial assets and physical assets like bricks and mortar, like art, classic cars. And yes, of course, you can also go into the riskier things, the trading on the financial markets and so on, but only at the pointy end of your pyramid when you've got these other layers in place. So if you do that, you will beat the market timers and the traders hands down over a period of time. You see, let's be honest. The truth is nobody knows jack shit about what's coming down the track. Will the Fed allow a recession so they can be seen to be doing something about inflation in an election year? I don't know. Will Russia invade Ukraine, or will they turn off the gas taps? I don't know. Will the BBC and other mainstream media go back to telling us the truth? That one I'm kind of more doubtful about. I don't know. You don't know. Even Elon Musk doesn't know what's going to happen. We've all seen too much radical action based on flimsy data in the last 2 years. Don't let that kind of thinking pollute your investment strategy. So my question of the week for you, and if you could answer this in the comments section, please, is what asset do you hold that you will not sell at any price in today's market? What asset are you so confident about that regardless of what's happening in this market or that market, you ain't selling this? Tell me the answer in the comments section. And you might also like to get a bit of a historical perspective on just what we've been through that's caused all this crunch to happen today. Have a look at the Century in 12 Months video. I've put the link in the pinned comment under here. So don't panic, don't buy the dip, don't sell, just keep on drip feeding into a range of assets and you will be fine. And I will see you next time.